was another down day for stocks. The stalemate in Washington, fears about an extended shutdown, and a disappointing report on jobs all weighed heavily on the markets during the day. Payroll firm ADP reported 166,000 private sector jobs were added to the economy last month, but that was fewer than had been forecast, and the figures for July and August were both revised lower. So by the close, the Dow was down 58 points, was down much more than that earlier. The Nasdaq dropped almost 3, and the S&P was off by a point today. Joining us now to talk about what day 2 of the government shutdown means for the financial markets and your investments, Jeff Kleintop, back with us tonight, Chief Market Strategist at LPL Financial. Jeff, always good to see you.
Hi, Bill. Thanks for having me.
What did you make of the president's comment that these negotiations are different this time and that Wall Street should be concerned about that?
Well, I think the president would like Wall Street to put a little pressure on the Republicans to act. And the fact is the markets really have the president wishes that were not the case.
So, Jeff, do you think things are going to be different tomorrow? I mean, up until now, the attitude from Wall Street is, long-term, everything's going to be okay. This is like a short-term blip. Do you think investors are going to react differently after hearing what the president said today?
Well, I think every day we go on, no matter what the president or other lawmakers say, I think we will get more pressure from the markets on Washington to act. I mean, there's a gravitational pull the longer this goes on, particularly the closer we get to October 17th. But yes, I think tonight, maybe there was some hope later today as stocks rallied a little bit that there might be some breakthrough this evening, or the president might offer some concessions, and that clearly was not the case. And so markets may pull back a little bit. But remember, investors have been trained this year not to sell stocks in the short-term political. Money to work in the last couple of days, but certainly did ahead of this as markets pull back. But the bottom line is this: to the extent to which the shutdown and worries over breach of the debt ceiling affect the real economy, affect guidance on profits as we get those reports about a week from now, Alcoa kicks things off, that's going to be where it really hits the road, and we really need to see what is the impact of all of this, because in the near term, it's really just headline filler.
But in the meantime, also, there are going to be a lot of government reports that investors are not going to be getting, starting with the important jobs report this Friday. And the Federal Reserve is also going to be sitting on its hands to some extent because it doesn't have all of this information. How is all of that going to impact investor confidence, what they do with their portfolios, not knowing what the Fed's going to do, not getting the economic data that they crave?
Yeah, certainly not getting some of those reports is important here. We've been paying such close attention to employment reports, given that the Fed is close to tapering, and not getting one on Friday. Certainly an issue of uncertainty for the markets that they're going to have to deal with. But, that means more emphasis was put on today's ADP report, which Bill had mentioned, a weaker number. Stocks were weaker today. Yesterday, we had the ISM report, a stronger than expected number, and stocks were up. So I think the market will make the most of the data points we get. We'll still get jobless claims, which are trending in the right direction. We'll still start getting profit numbers in the coming weeks. That's probably even more important. So there won't be a shortage of data, but certainly some of the data points that the market's used to getting won't be there, and that will raise a little bit more uncertainty. And that's why the longer this goes on, the more there's a gravitational pull in the markets to the downside to put pressure on Congress to act.
Jeff Kleintop, Chief Market Strategist at LPL Financial. Always good to see you. Thanks, Jeff.
Thanks.